Let's cut to the big news of the day. And from Mortgage News Daily, mortgage rates, 30-year fixed at 7.65. 7.65. That is a new 22-year high. We already hit a 22-year high the other day when it went to 7.51. Now it's at 7.65. That's startling. The only thing that makes that look good are interest rates at 6.8, right? If you bought a house at 6.8 and thought it was high, well, now, yeah, this is much better. This is much better from your perspective. It's amazingly high. I mean, to see it jump from 0.51 to 0.65 in one day is remarkable. I've heard reports that mortgage companies were actually repricing. I mean, they always do this but repricing during the business day because rates just went up so high yesterday, Wednesday. There were multiple repricings during the day from mortgage companies. You got a quote in the morning, and by lunchtime, it was no longer good. So that's how fast the mortgage rates were going up yesterday. Yeah, so you better, I hope that you locked in before breakfast, because if you waited till after lunch, you lost a lot of money. I mean, look at the 10-year. The 10-year this morning, yeah, wow, up again. You see it in the green territory there, plus let's see if we zoom that in there for you, plus a couple of basis points, 4.665. 4.665. Now, if you are a regular viewer on this YouTube channel, you might remember a week or so ago I said resistance was at 4.34. And rates had a tough time when it hit 4.34. We're not budging over 4.34. But I said once it hit that and once it passes it, off to the races. And we are now off to the races on the 10-year treasury. And by the way, why the 10-year treasury is more or less tracks to mortgage rates is because they're both similar types of long-term debt, right? People tend to pay their mortgages. The government tends to pay its debts. Therefore, yeah, right. And so the mortgage rates typically run about 200 basis points above the 10-year. But now recently it's been more like 300 because I think people are thinking that, or lenders are thinking that the risk of default is higher for borrowers borrowing into their home. You know, mortgage business people tend to pay their mortgage, right? So it's usually a safe bet until it isn't. But to see these rates go up like they are here, this is just staggering. It seems to me that rates towards 8% or at 8% are just around the corner. I don't see any resistance in this marketplace except the federal government shutdown. That seems like a possibility, right? That seems absolutely possible. The federal government shuts down. The auto worker strike out in Michigan, or actually that's in multiple locations across the country. That's a possibility. But other than that, I mean, do you really see any headwinds on the way to 8% mortgage rates for the 30-year fixed? Now, those are on average, right? Because if you have lower credit or some type of lower risk profile, you could already be getting quotes at 8%. The 7.65 is only if you have really good credit so, and that's an average. I'm sure there's quotes below that, and I know there's quotes higher than that. So I think the average for the 30-year fixed is absolutely going to 8%. I said that before the mini banking crisis that we had in March, and the mini banking crisis happened, the Fed paused, but in the end, it's the government deficits, it's the devaluation of the dollar, it's the delinking of the dollar from, and this is huge macroeconomics, from the petrodollar and other countries like China who are wanting to move away from the dollar as the reserve currency, which is devaluing our dollar. It's effectively a hidden tax.